Hello investors, welcome to Simpli Stocks. In our March Q4 FY26 result series, we have covered so far more than 30 trending businesses that have reported good results. Now, since almost all companies have released their results and conducted their con calls, so what I'm trying now, I'm trying to present updates in a slightly more, let's say, organized way. Previously, for example, I would talk about a jewelry business and then cover a hospital stock all within a single video. But now I'll try to go sector wise or let's say category wise along these lines. Today, we will study 4 auto ancillary businesses that are part of our watch list, which are doing well. So we will cover these stocks. Now, without any delay, let's quickly get started. The first two businesses we will look at are Lumax Industries and Fiem Industries. Both Lumax and Fiem manufacture lighting systems. The only difference is that Lumax is four-wheeler focused, while Fiem manufactures headlights, tail lights, and indicators, etc. for two-wheelers. Now see, there are two companies from the Lumax group listed in the market, and you should not get confused between the two. Lumax Industries is in the lighting business, while the other one, Lumax Auto, manufactures plastic parts and control systems. We will look at Lumax Industries right now, and then we will study Lumax Auto later on. Now, the trigger for Lumax and Fiem is the ongoing premiumization in vehicles. You see, cars and bikes are being made much more fancy and good looking these days. And due to this premiumization shift, the lighting systems market is shifting from halogen lights towards LED lights. LED lights are better in many ways. For example, firstly, they look good. And secondly, performance-wise, their light throw is also very good. In two-wheelers, almost 80% of the market has already moved to LEDs. Nowadays, you will find LED lamps in most two-wheelers, but there is still room for growth in passenger cars. In passenger vehicles, the base for LEDs is currently at 60%. Now, the advantage for Fiem or Lumax in LED lights is that these products come with better realizations and margins. This means Fiem or Lumax can earn higher sales and higher margins by supplying more expensive lights for the exact same motorcycle or car. Now, moving ahead, let us look at Q4 results of Lumax Industries. So, during the months of January to March, their sales grew by 30% compared to the last year. The auto sector has benefited immensely from the GST rate cut. Plus, as the contribution of LED lights has increased in their sales, you will see that their margins have also improved. You will notice that the EBITDA margin went from 9.2% year on year to 10.4% in Q4 this year. And for the full year, the EBITDA margin increased from 8.5 to 9.8%. Because of this, EBITDA grew by 40% plus in both Q4 and for the full year. But you will not see the same growth in net profit. They had to take a one-time hit due to changes in the labor codes. But then again, I will say that is not a concern as such because that is common across all companies. So not a big concern. Now, Lumax now gets 61% of its business from LED lighting. But the trigger here is that within their order book, the share of LED orders now stands at 88%. That is why moving forward, the share of LED segment will increase further, and from here the margins will expand. And as I told you, they are mainly four-wheeler focused. You will see here that also 65% of their sales come from car lighting systems and 29% from two-wheelers. Regarding margins, management has mentioned that their EBITDA margin, which stood at 9.8% last year, can remain in the range of 10.5 to 11% this year. Margins could have been better, but raw material prices have gone up due to the war and supply chain disruptions. Because of that, there will be some pressure on margins. But even then, see, there is still some slight improvement compared to FY26. So that's good considering all the macro environment which is out there. And management also stated that this guidance is conservative, keeping all the factors and uncertainty in mind, which is there. So it is not like they will reduce it in the mid of the year with some excuse. Now, little bit of pressure on margins is also due to rising employee costs. For example, the Haryana government has increased the minimum wage rate for laborers. Similarly, labor and staff rates have gone up in North India and Gujarat as well. But that will be passed on over time. Auto ancillary companies pass on the inflation or rise in inputs to auto companies with a gap of 1 to 2 quarters. So they can increase the rates of their parts quite easily because they have long standing relationships with the OEMs. Apart from that, everything else is going good, going great. And Lumax customer base is also very strong. For example, Tata, MG, Honda, Hero, and Mahindra all are their customers. Looking at the future, their target is to take this EBITDA margin up to 13% over the next 3 to 4 years. Currently, they have reached almost 10%. They are eyeing 50 basis point improvement this year, as I told you, and then 1% type of expansion every year moving forward. And their target will be to grow at double the rate of the industry. Like this year, car sales grew by 9% and two-wheeler sales grew by 12%. So they brought double the growth at around 20%. Then the sector also got a push from the GST cut. So the industry numbers for Q4 were even better. So Lumax Industries is a good business, I'll say, in the auto ancillary space. We can easily expect annual sales growth of 17.5 to 20% here at least. Plus, there is also clear roadmap for margins to expand from 10% right now to 13%. So you will see the valuation is again very good considering all this. Right now, as this video was being shot, this business was trading at a PE of just 26. Yes, now until the war ends properly, like even right now, although de-escalation is going on, but there are some concerns. This or that news is coming here and there. So until the war ends entirely properly without, even 1% chance of tensions again. So until then, yes, there is a risk to margins and a bit of risk to demand as well. But you must also understand that you are getting this valuation only because of this uncertainty that is going on. Otherwise, before the war, Lumax had even gone up to a PE of 35, 36. So I'll say it is a good business you can explore. After Lumax, let us take a look at Fiem. So Fiem is entirely two-wheeler focused, supplying lighting systems to everyone from TVS and Honda to Hero and Royal Enfield. Their performance has also been quite good. So you will see here that in Q4, their sales increased by 17.5% compared to the last year. The EBITDA margin came in at 14.7%, up from 13.2% last year. So due to this margin expansion, EBITDA grew at a faster rate of 30%, although net profit grew at a slightly lower rate of 22% due to the implementation of the same labor codes. Also, the sales growth for the full year came in at 16%. In their business as well, the share of LED lighting has gone up and has reached 63%, almost similar to Lumax. And they are also talking about taking it to 75 to 80% moving forward. Apart from this, while we see 17.5 to 20% type potential in Lumax, I think Fiem is a business that can grow at roughly 15 to 17.5% rate. Now, you must have also noticed that the other businesses I usually cover on our Simpli Stocks channel, they are high growth models, right? So you might be wondering why I am covering this 16, 17% type top line growth business right now. So the trigger in Fiem is that they are putting a lot of emphasis on growing their passenger cars or four-wheeler segment. They have developed new products. In addition to this, they have supplied their products to companies like Mercedes and Tata for testing. They are targeting 100 crore rupees in sales from the four-wheeler segment this year, and then they will scale it up to 200 to 50 crore rupees in the next year. Adding the four-wheeler segment will firstly de-risk their portfolio, and then it can also lead to increase in the growth rate of the business. They are also making an investment of 200 crore rupees for this. Through this, they are adding more manufacturing capacity, and they have also even opened their own research and development center. But a slight drawback in Fiem that I see is that the company is already sitting on quite healthy margins. For instance, Lumax can go from 10 to 13%, but Fiem is already at 14% EBITDA margin. For the next 1 year, there is not much scope for margin improvement here until the new products go live. That is why I believe that maybe the market gives a very slightly higher PE to Lumax, because for one, the growth there can be 2 to 3% higher. And secondly, there is a separate trigger for margin improvement. But Fiem is also a good business in itself, which you can study on your own. They have several products in the development stages that will remain in focus moving forward. Now, a humble request just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video, and yes, please subscribe to our channel as well. Anyway, let us get back to our discussion. The third business we will cover is Lumax Auto Technologies. Lumax Auto is in the manufacturing of plastic parts, interiors, and apart from that, control systems ranging from control housing to gear shifters, seating structures also, and various other auto parts. Around 53% of Lumax Auto's business comes from advanced plastics, where they manufacture cockpits, consoles, and door panels. Then the share of structures and control systems is 15 to 17%. Here too, you will see how excellent the growth is in content per vehicle or kit value per vehicle, or basically premiumization. So premiumization shift is visible here as well, right from car's cockpit to door panels, gear shifters, and to seating structures. All such parts are seeing improvement in design and functionality these days. So if they used to supply a part worth 1000 rupees for a car in the past, today they have bettered and improved that same part to make a sale of 5000 rupees. Now, let us look at Q4 results of Lumax Auto. So, during the months of January to March, their sales increased by 25% compared to the last year. While we saw an expansion in the EBITDA margin for other two players, the margin in Lumax Auto has remained roughly the same. As a result, the EBITDA also grew almost in line with the sales, but you will not see the same growth in net profit. They had acquired a business called Green Fuel. So, due to certain accounting adjustments, the PAT growth is lower at just 22%. But overall, these are very good numbers. In the long term, Lumax Auto's target is to keep growing at double the rate of industry, which is around 20%. Out of this, they will bring 15% growth from their business and 5% growth by acquiring other smaller players or other companies. The triggers for them are software and technology upgrades that are happening in cars these days, ADAS, and the premiumization of interiors. Margin wise, the company has reached 14.5%, and their vision is to take EBITDA margin up to 20%. So we can say that among all the players, all the auto ancillaries, Lumax Auto has the most potential for margin expansion. And this is one reason why the market gives this business a slightly premium PE or valuation as well. And they have several triggers also in place to reach this point. So Lumax Auto is like working on critical high margin products in the telematics and mechatronics segment, which are in the pipeline. And there are very few competitors in this segment. And since these products are related to safety, sensors, integration and communication and all, the development cycle and also the subsequent approval and testing cycles are long. So over a time, a moat will develop for Lumax Auto, as OEMs will develop strong relationships for these products with the Lumax. For future growth, they have a large capex of 275 to 300 crore rupees planned for this year, through which they are adding more capacity for their high growth segments. So Lumax Auto is a special auto ancillary business in which we will get to see the product mix changing over time. The share of advanced plastics, which is the biggest segment right now, that should decrease slightly going forward, and the telematics and mechatronics segments, they will grow larger in size. So Lumax will get a positioning of an auto tech company perhaps. Now moving forward, the fourth and final business we will cover is Pricol. Pricol is quite famous because of its monopoly status. They hold about 55 to 60% market share in instrument clusters. The instrument cluster or driver information system is that screen in the vehicle which displays all the information like speed, fuel level, and RPM. So they have this driver information and connected vehicle solutions or DICVS segment, under which they manufacture instrument clusters and sensors, etc. This is their largest segment, from which 60% of their sales come. Then 20% of their sales come from each of their other two segments. One is the actuation, control and fluid management, or ACFMS business, under which they make oil pumps and coolant pumps. And the other is the precision products, or P3L unit, which includes products like bolts, radiator gills, garnish, and finishers. This is the Sundaram auto business actually that they acquired and rebranded some time back. But a problem with monopoly business is that, and many people don't understand, is that if you are very large in size, or let us say you are the biggest whale in the market, then obviously you will be able to grow at the same rate at which sector is growing. You cannot grow faster than the sector, right? Like they have done well so far, but looking ahead, they are being conservative and they have given a growth guidance of only 13 to 15%. So if you ask me, among all four companies, I found Pricol's management to be most conservative. But given the way the war has dragged on, I will not be surprised that they, who knows, they might actually be turned out to be right. Anyway, management shared that their previous capex cycle is now fully complete, and now they have reached maximum capacity utilization across all their plants. And now for future growth, the company is entering into a new investment phase. They have planned a capex of 680 to 700 crore rupees, which they will start executing from this year. And their results were also good since the Sundaram auto business was added. 43% growth came in Q4. So it is not written here, but you will see that sales increased from 750 crore to 1080 crore approx. Similarly, the profit has more than doubled. The core business growth came in at around 15%. Now, Pricol is a trusted supplier for Tata, and they hold about 75 to 80% market share in Tata cars. The company still does not cater to Mahindra, although they are advancing talks with them. If Mahindra unlocks, then that will be another positive trigger for Pricol. Now, their main focus is to grow their precision products at a faster rate. Although no margin expansion is visible here in the near future, the higher expenses for the expansion or the capex they are doing right now, they will eat into the margins of the company. On the contrary, they also mentioned that given the way prices of polymers, aluminium, memory devices and also and semiconductors, so the way they have gone up, there is actually a risk of margin pressure for the companies, because as older low cost inventory runs out, so they will have to also purchase inventory at the higher rate. So to summarize at the end, even though Lumax Auto's PE is a little bit higher, you will see they have the maximum number of triggers for growth and margin expansion. And I keep saying this repeatedly, that you should not have an issue giving premium valuation for a stock if the underlying business is performing well. So I would place both Lumax Industries and Fiem Industries at the second spot after Lumax Auto. And Lumax has the trigger for margin expansion, Lumax Industries, while Fiem has the new products in pipeline. Pricol looks the least attractive among the four to me, although you can play the valuation gap over there. So it will take, I think, time for new capacities to come online. So in my opinion regarding Pricol, I'll say that you should currently focus on other, other businesses which are doing well instead of Pricol. But anyways, Pricol is also equally good. Lastly, if you like this video, then definitely give me a thumbs up. Also, make sure to subscribe to our channel. If you support us by liking our videos and also subscribing to the channel, I'll be able to bring actually more such videos for you. I'll be much more motivated to work for you. So, all right, with this, I'll see you in the next video. Happy investing.